Hello, everybody. I just wanted to get in touch with everyone regarding this year's tax year and how things are going to go. Um, so we will still be virtual, and I think that will be throughout the entire tax season. However, everybody can still drop off, and this year we do have a program that will help with gathering information more securely, but there are a few options. So one of the things is I do not want personal information, T4s, T5s, any kind of slips, um, just emailed to us. It's not secure way to do it. I know maybe in the past, if you have, I'm trying to get everyone on board with not, doing it that way. So there is a program that we have, and we can, as soon as you contact us, we can send you a portal for you to be able to upload. The other option is Google Share. If you move it to the Google Share and just share it, the folder with us, we can get access to all your information. So please call our office regarding the two methods so that we can make sure your information stays safe and secure. Okay, a couple of things this year that are different. So we all know a lot of us worked from home. So the government has finalized that workspace from home. I talked a little bit about it last time in my letter that we sent out, but now they've solidified it. So there's two things. So one is the traditional way, which is the T2200, and your employer will have to sign saying that, you know, you worked from home, and you would then be able to, as an employee, you can write off just heat, hydro, and water, and I believe internet because of COVID. You can write off, and then whatever that percentage works out to be for your workspace at home. And two ways of calculating, one by number of rooms, so one room over number of rooms, and the other would be, and that includes bathrooms, bedrooms, um, yeah, that bathroom and bedrooms, but not the basement. And the other method is by square footage. So if you have a 1,500 square foot home and your office is 100 square feet, then you get 100 over 1,500. So that's the one method. Now, if you never used to work from home, and so you never received a T2200, but then you were required to work from home because of COVID. So required is the key word here. It's not that, oh, I just wanted to choose to work from home. I didn't want to go to the office. Then you're not entitled to the home office with the T2200. What you can do is claim the $400 as a deduction. You don't need paperwork, you don't need a T2200, and you can write off the 400. So you need to let us know if you were required versus not required, and it was just your own preference, okay? And then we can help guide you onto what form you need and to get your employer to sign, okay? And like I said, the 400, you don't need a form, you don't need receipts, but you only get 400. Where the other method, you might get a lot more, but you got to make sure that you qualify, okay? Just because your employer fills out the T2200 for you does not mean that you won't get an audit. And if they find out that it wasn't a requirement, there's going to be, you know, a little bit of trouble there. So we don't want that. The other thing is self-employed for those that have business returns. And I know, you know, you should be putting tax money aside. I would say on average 25% to another account so that when your taxes are due, you can pay your taxes, because self-employment, you don't have any withholdings taken off. So you really need to do that yourself. And I would say on average about 25% would be good. You also have to know that you have to keep all the receipts. You don't have to send us the receipts, but you have to keep the receipts. And there's an Excel spreadsheet for businesses and rentals on our website, kmpc.ca, and you can download those Excel spreadsheets and fill everything in, and then you can, you know, Google Share, or we can send you this portal for you to upload all your documents. And you don't need to attach all the receipts, but you are responsible for having those receipts, that the information you're putting on those forms are true, and that you keep those receipts for 7 years, okay? So that's still something you should do. I have had a lot of calls and people asking, is the capital gain tax going up, from 50% to 75%? The thing is, we don't know. There has been some talk, but we don't know. And I know some people are saying, oh, I should offload, my property. The problem with that, though, is that you're going to be paying a capital gain based on information that isn't for sure. So you're going to pay tax when you don't really need to pay tax, because let's say they don't change it and now you've offloaded property you didn't really need to offload. You do not pay capital gains until you sell the property. So don't start selling property thinking it's going to go to 75%, because you're going to end up paying tax that you don't need to pay. Okay. And we don't know if that's going to go up. So never base your decisions on, what might happen. Base on what you do know for sure is going to happen. And at this point, we don't know for sure if they're going to do that. Okay. I get questions, should I do an RSP? Should I do a TFSA? And I would say for those that are in a high income tax bracket, an RSP is always a great way to not only invest for your future and pension, but you also get back whatever your tax rate is on the RSP. So if you're at a 50% tax rate, if you put 10,000 in, you'll get 5,000 back. Now, depending, making sure that, we're talking about employment income where there's been source deductions taken off, then you would get that back. But if you're self-employed and you haven't paid any tax or installments, then it'll just reduce the taxes that you would normally have to pay, but it's still based on that tax rate. So that's great. Now, TFSAs, though, are also important. I would say, I talk a lot about budgets and how people should be saving for a rainy day emergency funds, and you should have a year's worth in the bank. So TFSA is a great way to feed that emergency fund, because once you have 1 year in the bank, you just keep adding to it, and all the income you're earning in that TFSA is tax-free. So it is a good way to save up for that emergency fund, and it's not a bad tool, but there's nothing that goes on your tax return. So you don't get the deduction for that amount that you invest in your TFSA. Another question I get a lot is about, child support. Can I claim it if I pay it, or, do I have to claim it as income? And after 1997, any new negotiated court orders, you no longer deduct it and you no longer claim it. Now, I know I've had some clients ask about, claiming a child as a dependent. So there are some strict rules around that as well. Please make sure you call me about this. And you also, if you have any, say, alimony support, that is deductible, but you have to have a court order. They're going to ask to see that everything has been laid out, and, that it shows that you were having to pay that. Okay. You can't just send in checks as a backup. You have to have a court order showing that you have to pay that alimony. Okay. The other thing that I would talk about too is sometimes when you are over 65 and you are still working, you no longer have to contribute to CPP. So you can fill out a form. It's called a CPT 30 form. So if you're over 65 and you still want to work, you do not have to have CPP deducted off your pay anymore, but you have to do that election to stop it. Now, some people will say, well, I'd rather just keep paying into it because I'm not going to collect it till 70, because you know that if you wait till 70, you get, I think it's about a 40% more of your CPP, which is a great deal. And then there's some that want to collect it at 60 because, hey, they're thinking they may not even be alive till 70, who knows? But if you're set up financially in a good position that you don't need the CPP, I would highly recommend you wait till 70. After 65, you can stop the CPP if you want. If it's your best 5 years of income, then and you're maxing out, you might want to keep contributing. But if you've always maxed out, then there's no harm in stopping the CPP. It will not affect you. Okay. And I think that's about it. I just wanted to touch base. I think the only other thing I want to talk about is SERB. So I think some people might be getting a letter saying that they don't see how they qualified of the 5,000 that they had to earn, especially if you're self-employed, because you had to show $5,000 on your 19 tax return, or prior to you filing for SERB, you had to show in the last 12 months $5,000. So some people applied for SERB thinking, yeah, I made 5,000, but what they forgot was after they took all their deductions, they actually only had 2,000 on their tax return. So they're going to get caught unless they can show that 2,000 as of December, and say January to March when they first started, they could show that they've earned that 5,000. If not, you're going to be in trouble as far as you're going to get clawed back that SERB. You're going to have to pay it back. So remember, it's a 12-month prior to you putting in the application for SERB. So if you put in the application in June, the prior 12 months, as long as you made $5,000 and they see that, then that's great. So some, people might have to go back and have a look at, and whatever you do, do not ask me to amend your 19 so that it shows 5 and take off some deductions. I won't do it. And CRA is onto that anyway, so I don't recommend that you do it either. It is what it is, and I think if anything, they're going to be a little helpful at a payback plan. I don't know, unless they think it was actually fraud, then you're really in trouble. But yeah, as long as you can show the prior 12 months of 5, you'll be fine. So just because your 19 may not show it, you might have still been earning up to your first point of filing for SERB, and you could show you earned 5,000. Okay. And I think besides the other benefits that are happening out there, there's a new sickness benefit, recovery benefit, the new SERB, and the recovery caregiving benefits. So those are all benefits that are up on the Canada.ca website. Look to make sure that, if there is any that you qualify for that you didn't get, you can go for it. And I think that's all I wanted to do. So just make sure you have all your slips. Remember, the banks don't offer their slips, T3, T5s, till the end of March. So if you have any investments, please don't even ask me to do your taxes until after, because amending is, costly. So make sure you get all your slips first. And then, yes, contact our office. We still allow drop off and pickup. However, you have to make an appointment to do that, and you will have to ring our doorbell and we will let you in, and then you can pick up. Last year was a little chaotic from everything all of a sudden moving to sort of a virtual environment. So what I would suggest this year is please make sure you get your 19 tax return. And if you want to pick it up, and you say you're coming to pick it up, please come in and pick it up, because we've gone through the trouble of putting it all together and printing it, and we ended up with a whole whack of them, and people didn't come in when they said they were going to. So it'd be really nice if you did. But electronic is fine too, because we can password protect it. We will send it through our software that we have called WeTransfer.com, and it's a portal that is safe and secure. So that is also available. If you don't want to come in, that's fine. We can do everything electronic, easy. And if you do need to set up a Zoom meeting to go over anything, that's typically not in the charge that I charge for tax returns, but I understand things are a little different. And I will be doing videos and sending you videos and explaining your tax return if it's complex. If there's a lot of rentals or business, I have no problem doing that as an added service. And but if you actually want to meet, then that will have to be set up through Julie as well. And there could be a small charge for that, but it depends on why you want to meet and what you want to go over. And but a phone call is fine too. No charge for phone calls. And yeah, so I hope to see everybody, and whether it's through the office or Zoom, if you wanted to set up a Zoom. And I hope everyone is doing well, and let's hope that we get through this second lockdown and not have another lockdown, and that we get back a new norm, but a better than what we're at. And I hope everyone's doing well, and we'll talk to you soon. You take care. Bye-bye.